13 rate hikes by the Reserve Bank of India, and most of us have postponed buying our homes. As a result, supply in the market has increased and is expected to take several quarters, in fact, for some of those properties to get sold. But will this mean that prices will correct? Here's a report.
While demand did see a nominal uptick in the festive season, the respite appears limited for developers, with oversupply being a concern for many.
With almost 50 million square feet under construction at any given point of time, a delivery schedule of roughly 12 million square feet per year, I think that's something which we should be concerned about.
While sales are stable, increasing supply is a concern. According to a BOA-ML report, the main concern is the gap between demand and supply. Bangalore, for example, continued to see new launches despite demand remaining flat with a negative bias. Because of this, at current absorption levels, Bangalore will need 8 quarters to exhaust unsold inventory. The story is similar in Mumbai. Only 1,700 units were sold as against 3,000 units launched in the third quarter of calendar year 2011. It will take Mumbai almost 13 quarters to sell the pending stock. Noida in the Delhi NCR region is another concern, with over 68,000 units lying unsold. The stock takes into account not just ready homes, but also homes under construction.
One is seeing, deep discounted supply as well. However, on a scheme basis, this supply is, the consumer is asked to take a fairly significant risk on this supply. The risk is on delays, the risk is on approval.
Despite this, prices continue to remain strong, though this may not be the case any longer. In Mumbai, developers are giving discounts of up to 15% to genuine buyers. So from the looks of it, if you bargain right, you could get yourself a discount on your home. Ruth Saldana, BloombergUTVI, Mumbai.
Joining us now on the final word, Anirudh Wahal. He's the Director for Occupier Services at DTZ. Anirudh, thanks so much for being with us this evening. How are you reading the supply picture in particularly the Delhi NCR, Mumbai and Bangalore markets? Because research is showing that oversupply is now becoming a key issue.
The question really is, we don't know about a crash, but there could be a slow crash on the prices. And the question is, who will be left holding the baby? Is it going to be the developers, the investors, or the end users? And eventually, all real estate depends on the use, the end user and the end occupier. And the end occupier seems to be kind of missing in comparison to the amount of supply that is available in the markets. And I say that based on the total quantum of demand which we have seen year on year over the last few years, as well as on the specific conditions of the interest rates in the market, the salaries which are not growing, the salaried jobs which are not growing. So if we take a number of things into account, there is likely to be a slow crush over a long period of time. The real question is how much of the stock will developers be able to move in the meantime, and how much of the stock will the investors be able to lease out on the properties they have bought over this time period. So it's going to be an interesting mix of things, and answers are not going to be clear at this moment. A whole lot will depend on how and where the end user demand comes out from. And that really is not clear at the moment.
Right. So talking about demand, though, Anirudh, do you see it coming in, when do you really expect to see it picking up, especially in these oversupplied markets?
It will be different for the different grades or the different, price bands in real estate. So if you were to look at the upper crust, for example, the stretch between the Lower Parel Worli belt in Mumbai, for example, all premium housing, all multi-million-dollar apartments, high-rises. Now that market is likely to produce some 20,000 units in the next 4 years and 40,000 units over the next 6 to 7 years. And the question is that though investors will very willingly invest in it, it's a prime land in Mumbai, will there be commensurate rental generation over the same period? And the answer looks unlikely. So that is one market. If you were to look at the suburban markets and the outer suburbs of Mumbai or the outer suburbs of Delhi or Bangalore, the pricing is such that the kind of salaries which those areas populations have, they can easily support those kind of rentals and those kind of prices. So yes, it really varies between market and market. If you are looking at the premium housing segment, And if the premium housing segment is overstocked, then it's a bit of a cause to worry, because there is not too much job generation in the at the CEO level. Not that many new businesses are being rolled out, not that many new startup companies are starting new businesses. So the upper strata of real estate is likely to suffer a bit. But as far as the suburban areas go, I think the growth will continue. And also because the demand is still kind of outstripping the supply, there could be a short-term glitch of, let's say, 6 to 12 months. But beyond that, it's not a long-term issue.
Right. So how are you reading pricing then going ahead, Anirudh?
Like I said before, it's not going to be a crash. It is going to be a crush. Because the crash is not going to happen because as developers put out projects, they have a lot of bandwidth in their land acquisition cost and their final sale price. So they can absorb the loss within that price bracket. The investors who step in to take properties from developers may have a longer waiting period than anticipated before putting those properties out back on the block for sale or for lease. Because the lease market or the end user market is kind of restricted by the salaries and by the job growth. So it's the fundamental economic factors which are restricting the job growth, or which are restricting the salaries growth. And that kind of determines the end user demand. So that is going to suffer. How much the investors are going to suffer, only they know, because they have an investment appetite based on not so accounted for monies or, balance sheets. So that is something which we can't comment on. Whether the developers will be left with the baby, unlikely, because they have a lot of margin at the moment in what the original land acquisition price was and where they were aiming to sell it at. So they might bring it down a little, and a little bit of that was already started in Mumbai, we saw.
Right. Anirudh, thanks so much. We'll leave it there, but thanks so much for joining us tonight. Still to come.